The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
I hate it when I do that. I hate it when I do that, but I did it. 877-927-6648 for another excellent edition of the Power Trading Hour with me at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So we've got the makings of the last gasp of a move higher. When we broke through the levels on Wednesday, I was pretty sure that we were making some kind of buying climax in the market, but probably weren't going to find a high until the close today at the earliest. But when you look at the volume, it is speaking in a whisper today, even much less than what we saw into Wednesday's close, which was not exciting. We basically had a lot of people short and covered the last 10, 15 minutes on Wednesday, and that got the volume up to acceptable. But, we probably need something like 14, 15, 16 billion shares, and we're not getting it. I think we got 11 or 12 billion the other day on Wednesday. But actually, volume did pick up a little bit to the downside yesterday. Now, on today, this is the push, and what you're always waiting for is not just a little change in volume, but a massive change in volume, and we certainly have that today. Doing about 6.2 billion shares. My Discord, okay, well, we'll turn that on. Okay. I don't actually have anything up, I don't think. Yeah, try to get everything leveled out here. We'll turn on that again. I don't know why it turns off occasionally, but it does seem to do that. Go live. Okay, we can do that. And then we can go back to the show. Oh, there we go. We've got it going on. Thanks for everybody for reminding us. Okay. See. Oh, anyway, we're back to volume. And like I said, about 6.2 billion shares. We did about in the neighborhood of about 12 billion shares on the consolidated tape for the CBOE, which is what I look at mostly because it's torn down to every single market that feeds into every single exchange, and you can actually see where the volumes are coming from and extract the dark pool numbers out of it and know how active those folks are. And even yesterday, we almost hit 40% on the dark pool numbers. And on an average for the last, I'm going to say last couple of years, it's about 33%. So we have about 7% more than average. A lot of times, up a percent and a half, or down a percent and a half, pretty much in the range of normal distribution. And 40% is huge. Either everybody's trading in those dark pools now, but just a couple of days ago it was 36. So you can see the big hand of big players out here playing. You don't know whether they bought or sold. Well, I guess you have to actually have a buyer and a seller for each one, so not technically correct. But the question is what they were doing in those, and were they selling on the way up? Were they covering short positions? A little hard to actually figure out. But I did want to get into probably the biggest thing that I thought was a shocker. Do I have it today? I don't have it up there. That's the next thing I want to talk about. But If you go through the data from the Fed over yesterday that they release every week, they actually tell you how many or how much at the buying price of equities that they own. And for the first time in a very long time, we see that the Fed was out buying equities over the last week. We don't know exactly when they bought them. They only put it out once a week, but it comes out every Thursday. So I'm going to assume that they were throwing a little bit of gasoline on the fire with $4.6 billion. And I'm going to say with the way the market was acting, they only did it in a few days. So is the Fed put actually back? Are they back and going to actively try to prop up the market for some reason, political, elections, some other reason that we are unaware of? Well, they are active. Now, we'll look again next week and see if they add any more. But 4.6 billion shares in a week is a little bit of cash when you add it to the top, because generally the market's, just the buyers and sellers are maybe a couple of percent off. That you can actually tip a market with $4.6 billion worth of purchases seems rather interesting. So we may be in a brand new regime that's just like the old regime, where they're actually actively supporting the markets. I know that many people talk about cash coming in from foreign countries. If anybody knows a way to actually measure that, or they've got a website that does that, I'd really love to see that too. I've just never found anything that talks about where the cash actually came from, foreign or domestic, only that we see shares were bought or sold that day. But we'll keep an eye on it. So there may be a little bit more going on behind the curtains. And let's not pay attention to Mr. Powell. We see him behind the curtain there. But at least for this week, there is something going on. 877-927-6648. Now, other things happening. 5 of China's largest state-owned companies announced plans to delist from the United States as the two countries struggle to come to agreement allowing American regulators to inspect audits of Chinese businesses. This is something that I've railed about for probably 4 years. And we've got China Life, Petrochemical, China Petroleum Chemical Corp. all disclosed their intentions to delist in statements published in quick succession on Friday morning, along with the Aluminum Corp of China and Sinopec Shanghai Petrochemical. So I don't know of a lot of people actually playing on those. I do kind of find it interesting, the timing. We know that Jack Ma is being forced out of Alibaba and really kind of being forced out of owning any kind of public company by his Chinese masters. And yeah, it's tough being a capitalist in a country run by the Communist Chinese Party. But is this a prelude to something else, maybe bigger? Back in a minute.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we have some emails. We'll get to those in a minute. One of the ones, the first one was just about am I looking to read more into the Chinese leaving than I should? And there's a great book by Herman Wouk, W-O-U-K. I remember reading it in high school. I was always a voracious reader, and back then you could get books or paperbacks for like a quarter or 50 cents or something if you would order them, and they'd show up like 2 weeks later at the school. I don't know if they do that anymore. I'm trying to remember the name of the company. Maybe somebody remembers. It was something, anyway, you'd order them and they'd show back up, and they were incredibly cheap for what they were. But he also wrote The Caine Mutiny. And I read that. But there was another book he had, The Winds of War, that is all about the lead up to the Second World War, which I always thought was rather fascinating. Of course, everybody gets to look at that from the hindsight of 2020 in the rearview mirror. Scholastic Book Service. That's what it was. Thanks, Ron. But that's you never know. You never know what's in somebody's mind. You know what a lot of people are going to do? You don't know what one or two or three or a handful of people that rule a country are going to do. Other things going on. What else did I want to talk about? That was pretty much it. Those are the big things. We got cash coming in from the Fed, which is interesting, and I'm wondering why they're pushing that. But it doesn't really matter, I guess, a lot why, other than the fact that they're dumping money into the market when they're supposed to be taking it out. And, of course, we're looking into it. I was looking into what really is going to be the effect of next month, where they're going to start pulling $30 billion a month out. And not, to this point, they haven't been adding more, What they've been doing is just recirculating back into what they had that came out. Now when it comes out or it matures, they're just not going to put it back in at all. As I said, give you an idea what 4.6 or 5 billion shares did this week. I'm wondering what $30 billion is going to do next month. So we can see, but that's it. That unless they're going to change something, maybe somebody knows something that I've missed. But I spent a couple hours Googling and rooting around in the Fed books this morning to validate what I'd heard. Of course, you don't have to really believe anything you read on the internet. But I'm going to assume that what the Fed put on its website is accurate. But they're really talking about 30 billion. The problem is that everything's in Fed speak and it's hard to tell. Now the Bloomberg folks were talking about 90 billion, and I guess that plugs a bunch of stuff into various things. The other 60 billion can come in. It doesn't have to come in. It could go out. I doubt if they do it all in one swap. So hard for me to think about that. But going into September, 30 billion coming out of the overall market with cash, equities, and everything else. Hard to think that the market it's had a nice bounce, but do you think it could stand the selling of and sucking out of $30 billion next month? Call me and give me your opinion, or if you have some idea or different ideas about what it's happening. Anyway, like I said, you dig into the Fed and you just end up with more questions than you had when you started. And of course, they make it as opaque as humanly possible. Reminds me of my dad whenever I'd come in and change the channels or something, and then I'd hear from behind me, "You can't see through muddy water." Telling me to get out of the way of the television. But certainly that's it. Anyway, a couple of stocks that I thought were interesting, mostly because they're harping on these things incessantly on financial infotainment TV. But this is Stitch Fix. Of course, it was down to 466 down at the low, June 5th. And you're just back up to the gap down of, June 10th. Where it came down on about 11 million shares. You got into it with about half that much volume, about 6.7 million shares. Now you're kind of coming back up. You're up today with about 1.3 million shares. So maybe a few of these things are getting off along in the tooth for coming back. I think everybody knows Stitch Fix. I don't know if they all know about Posh, which apparently is some kind of sweater company, but they're really harping on this one a lot and running it on the ticker, mostly because I think it missed somewhat today. Got down to about $11. And that's kind of it. More interestingly, as I said yesterday, probably way too many people short in Rivian. They really tried to hammer this after the close last night. But, you could just see the way it was trading, that it probably wasn't going down. From what I could tell, it was they were expecting a little over 10% movement in the options, and it didn't get much of that. It's a little higher today. And again, I suspect on a lot of shorting. At this point, if everybody's short a stock, it has to basically tell everybody that they're the next Enron to get to lower prices. And I think that's the problem here. The news wasn't bad enough. It wasn't good. They're really kind of talking about forecasting down a little bit. They're still talking about 25,000 cars in the first year. But they talked a great deal about the costs that they're incurring. To get cars out as fast as possible, they had them trucked there. So they're talking about now moving the trucks around by rail like almost all other auto manufacturers do. Of course, these guys were in a big hurry to get some out and on the road and get the PR going. But I don't know. how long does it actually take to send something by rail opposed to by truck? I figure, a handful of days for a truck to drive across the country. What is it, a week? 2 weeks to get a train across? Can it really be that bad? Especially if it saves you $600-700 a car. But I do digress. Yeah. Yeah. Pretty easy on the bond market, but yeah. But this is in the equities. 4.6 in the equities. Yeah, in the bond market, still $30 billion, and that's what they were adding, and you saw the effect. So yeah, a little bit can be a lot in the bond market. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
As we get back, there's probably a good debate around bonds. But my opinion would be, or my common sense would be, if they add that money and it moves the markets higher, then pulling it out probably would make it lower. But I don't know. Common sense doesn't always apply to the stock market. Coinbase Global for James. You wanted to look at this. Actually, not other than the fact that it gave it all back up on the 4th for coin. You had a lot of volume pushed up, and you've come back to this gap higher. That gap is actually not as bad as one would think. 54 million shares higher on that day of August 4th. And, of course, you have a kind of back into that gap today with about 8.66 million shares. Volumes were lower on earnings. I think this is yet another good example of way too many people short a particular equity. And that's probably why they ran them all out in the morning and then gave it up that day and it's gone sideways. But again, you may just be too short in some of these equities to actually see them go lower. Take a look at some of the semis. You have a nice pop on Applied Material, not the requisite volume though. On the downside, you gap down on the 9th with 10.3 million shares. You're up with a little less than 4 million shares as you come back into this gap lower that came from June 9th that should act as resistance as we go into Monday. Okay, what else do we have? The usual suspects. NVDA. And kind of the same thing. Over the last 4 days, you gap down on 98 million shares, set a low at 67 million shares. Yesterday, you came back up. Some people might call it an island reversal. I'm not so sure about it. 59 million shares up on the upside yesterday. Today, 35 million shares as we come back and start to fill that gap. This is the pattern I've been kind of talking about. Let me get that back here. Although I do use that for semis occasionally. Let's go back to that right there. Not uncommon to see it. A lot of times on massively volatile sectors, I'll use the 7x5 displaced moving average because that just smooths it out a little bit. But that's kind of the pattern you're looking for. You get the big move down, you close below the trend line for a day or two. You kind of into that yesterday. Today we're just starting to close out. Now, generally the Joe DiNapoli double repo pattern that you want to be watching for is that these things do need to close above. If you start seeing it move underneath that on Monday, you might get, or the next day that you see it move underneath that trend line, which is right about 182, 183-ish. That's generally where the destruction actually comes in. Now, you've got this one big gap now. You get another gap down, then, of course, you're talking about a third gap. You could get back down to that 150. And it may just be a individual thing on NVIDIA. But let's take a look at the SMHs to see if we can see something familiar. It's just the volume that seems to be falling out. You kind of have the same thing in the SMHs. That is that you've closed above the 7x5 since the 14th of July. You came back into it, closed under it for 1 day with a lot of volume. So at a minimum, you probably should retest that high volume pullback from the 9th. Now you're back up today. The high volume of the 9th had 6.9 million shares. You're up on about 2 million shares today, going into a 3.7 million share high on August. Again, the confirmation is when you cross back under that line. This is only a setup. There is no confirmation until you get into it. But I'm going to say 80% of the time, you start having any kind of price underneath that trend line, for at least a day, you're probably going to have a 3 or 4 standard deviation move lower. But as I said, you've got kind of a decent gap out there. Could you gap back down to, well, in this case, about 315, 312? It could be it. Now, that doesn't mean you have to, but it does mean that you want to be very careful. And if you want to stay bullish, that's fine. You go back underneath that line, though, you start seeing a little bit of strong movement and volume, you're probably going to get a fairly sharp retracement. 877-927-6648. Oh, and you can email me at path@tfnn.com. Okay. Anything on GLD? We talked about it yesterday. I don't see any reason to be bearish out here on this. You're back up to the previous high. There wasn't a lot of volume but there wasn't a lot of volume in the pullback either. You may be just consolidating sideways out here in those. Okay, let's look at GDX real quick. Yeah, I don't see anything else out here. You're just going sideways on this since what, the 8th? So you got 5 days on the sideways side after coming off a low. Not uncommon. You got a fairly decent gap up, and it's acting as support. So unless it breaks it, I don't think that you'd want to change your mind. Let's see, what else do we have? Okay, go back in here. What do I think of MUX? Let's go back to this here. McEwen Mining, which had a reverse split. You know, I probably would say this, and that is, for if you're just playing the odds, then it's a pretty big hit that you get a reverse split that you, I think the odds last time I remember was like 80 or 90% of a reverse split takes you 5 years to go, or I think like 90% are bankrupt within 5 years. I don't know about this particular company. Actually, the chart doesn't look bad. You've got a nice pop off the bottom with some juice. You pull back down. You're actually testing the previous low on lighter volume today. That was the June 25th low at 320. You got about 270,000 shares. You got 173 today, 270 yesterday. So you're coming back in to probably at least some level of support. But anytime you get a reverse split, I generally find it's easier to look elsewhere. But at the same time, if you're actually very apropos to actually trading it, you probably need to dig back in and find out how much cash that a particular company has. But as far as the chart looks like, you came back down on about 2/3 of the energy, pop back up to 411 on. You're finding support on lighter volume, so it doesn't look all that bad on a chart basis just for the moment. We've been talking about Workday, which we will talk about when we return.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And we're back and just kind of hanging out at the highs, 42. Is that right? Let me update it just to be doubles, top secret for sure. 42.64. Okay. And we'll take a look and see if any volume came in. 6.7 billion shares. So it's going to be a very light Friday. I can remember and I want to say it's 2005 or 6, somewhere in there, where we had a August that had no volume, and it just went up a little bit every single day. And then, of course, I think about the 7th of September, the whole thing just fell apart. It took like 3 days to give all that months back, where they just slowly turned the heat up on everybody. The market really only moved up on short covering, and not that much each day, but over 30 days, fairly a lot, and then gave it all up. I'll have to go back and try to find that in the chart somewhere, but that's it. Okay, other things going on. UNG, well, it's hard to get past now, being the strongest part of the year for UNG, at least historically. So you're up a little bit. You don't have a lot of volume. It may take another week or two, but my guess is that as we start looking at the very end of this month, the contracts for energy production for natural gas are going to be signed, and that's generally when everybody knows that whatever is left over is what they have to fight over, that isn't contracted out to these big energy what do you call them, producers, your local electric company. So that's kind of it. You did have a little lighter volume, a 14.7 million share high at 32.77, back down to 31.52. You only had a fairly light pullback, though. Now, you don't have a lot of juice on the way back up. 8.2 million shares yesterday. You got about 4 million shares today. So you may just be doing a little bit of consolidation out here, but my guess is the last week or two of the month, I mean, the odds are fairly high that between there and March is going to be a very strong natural gas market. So hard for me to think that anything gets worse for natural gas. Maybe for us, but not for natural gas. TLT has really been moving and has had some huge moves intraday. About 10:15 had a big move. Not exactly sure what actually happened in it. Of course, this really kind of just a bounce in this huge candle from yesterday, which had some decent volume, but not it. We'll continue to look for the bond market, go back and retest the 111.85 low. You still have an untested low at 107.71, and I suspect that we're going to be working through and down to that level and at least retest it before we find some kind of meaningful low in the bonds, if at all. If it breaks it, then that's it. But it's hard to think that the Fed won't have its foot on the accelerator pedal for a long time. As many economists will tell you, getting inflation down to maybe 3.5% or 4%, probably not as hard as it sounds. Getting it from 4 to 2, incredibly painful. That generally that last little bit is always it. The question is if they're going to stick to the idea that they have to get down to 2% for inflation, after they wanted to get to it for several years and never could, and the massive overshoot then now brings us back to the point where 8.7 is some kind of miracle. But I do digress. Okay. We looked at that. Another question about Palantir, PLTR. I mean, you had it on earnings. Again, I'm not a big fan of trading these. The most reason why is that all their customers are double top secret, and they can't really talk about what's going on with either their products or their customers. So if you're really looking for this as anything other than a very long-term hold, because you kind of believe in the business that they're in, it is tough. But very disappointing earnings. You're still kind of just at that doji close from that day, which was what? The 8th. And you had tons of volume. What was the volume that day? 125 million shares. So still kind of problematic. But, even Amazon went from $110 down to $10 before it started heading higher. Speaking of Amazon, going to have a lot of retailers next week coming out. And, of course, they've already got the whips to the horse on that one, flogging both Amazon and Target. I think Target's next week, isn't it? See if I've got it here. TGT. But they kind of already 8/17. Okay, yeah. So it is next week. They kind of semi. Did they semi or totally already say that there's problems right here in River City? I know Walmart did. Can't remember if Target did. Anyway, everybody running wild with predictions of $200 and $250 over the last day or two on financial infotainment. And that did a whole lot of nothing. Let's take a look at Target, TGT. We have other retail earnings pictures out next week. You're just back up to this huge gap down from the disappointment of 518. The question is, they're just really starting to solve and work out the supply chain issues at the docks in California. It's probably better, but I don't know how much that is still an issue. All I know is it's better. Don't know how much better, but they are starting to work through some of the problems at the docks. So, you got, almost everything coming from China, from Walmart or Target, or probably Amazon too. And maybe that's enough to get stuff going. I'll have to look at the short interest over the weekend. It's hard for me to believe that many people want to pile on Target and Walmart, but it certainly is. Let's take a look at WMT as we get into that. Okay. Okay. Just wanted to make sure we had it here. Okay. Yeah. We'll be back in a minute.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, we're looking at ON Semiconductor. Lars wants to know from the den. One of the companies that probably is actually going to do well because of the bills this week. They make some power conductors for electric vehicles that are on the cheaper side. And since this bill actually targets less expensive, read below the price of Tesla and Rivian and a lot of the other $100,000 cars. I'm not sure if it's 80 or 50. But the idea is that a lot of the cars that are going to be using ON Semiconductors are less expensive, and the big wad of cash that the government's going to throw to help subsidize less expensive EVs really probably is very good for ON Semiconductor. Tesla a little less so, and I'm not exactly sure on Rivian, but I think it's the same thing with those guys. That they're using another one that's a little bit more expensive, And of course, if you're going to try to make a inexpensive EV, you've got to go wherever the least expensive route is for power. So I think they could, on semiconductor, to do fairly well. You did get a close underneath on Tesla. You got a little move up. So more of a market question. But again, any kind of lower price out here on a lot of these would make it an issue. On you actually have a nice day with volume going through the previous high. A lot of green checks going to car manufacturers, and of course, on those cars, they're going to be going after less expensive power solutions for batteries, and that's kind of the wheelhouse of ON Semiconductor. So I think someone read the bill and figured it out. But yeah, a valid breakout. We'll be back on Monday. Same bat channel, same bat time.
Building wealth trading in the stock market seems